The number one driver of returns in the stock market is profits growth, and the number two driver is valuations. So the company dashboard is designed to give you the most essential tools to track those two drivers and make incredible investments while doing so. With that being said, let's look at the first part, which is the growth section. I want to highlight the profit growth. This right here is what determines your performance as a stock investor. But why would that be? Investors care about one thing: return on investment. That's it. And the only two ways a company can return money to investors are dividends or buybacks. For a company to do that, they need to increase their profits. That's why profit growth is the number one driver of returns in the stock market. Well, but how do we know if a company's profits will grow or not? Well, a company can only grow profits by selling more or by taking a bigger piece of what they sell. That's why revenue growth and profitability improvement are crucial, since they drive profit growth. These metrics represent the basics of growth investing. If you can master the basics of growth investing, you're gonna make a killing in the stock market. But of course, there's more to the company dashboard. Remember how we mentioned that the valuations are the second most important driver of returns? Well, let's look at the valuation section. Notice how for Tesla, this section looks a little bit red. Well, that's because compared to its industry, Tesla looks expensive from a valuation standpoint. But this is normal, since companies that are growing really fast will command a higher price, since investors are willing to pay more for them. These 5 valuation ratios are the most important and widely used in the industry, since they all compare the stock price to an important part of the business, such as profits, future profits, cash entering the bank, sales, and assets. These metrics represent the basics of value investing. And of course, if you want clarification on any of these, you can just click on them and you will get a very easy to understand explanation of what they do, how to use them with very nice graphics and examples. Now, if you can master the principles of both growth and value investing, this is how you truly make generational wealth in the stock market. All great investors understand both of these to a really deep level, but some will approach an investment from the growth perspective first and then analyze the valuation second. An example of this will be Peter Lynch, and some others will analyze an investment from the value perspective and then look at the growth second. An example of this will be Warren Buffett. Both schools of thought are valid and can work really well, but you have to consider both growth and valuation, not just one of them. Okay, so the third part of the dashboard is the quality section. Why do we have this section? Well, we want to make sure that the business growth and valuations stay the same or improve, right? And the simplest way to do this is by investing in a great business. And that's what the quality section is. All of these metrics doing better than the industry average strongly indicates that this company has a competitive advantage. We want this section to be as green as possible. So in this case, Tesla is growing really fast and they have an obvious competitive advantage over the auto industry, so it's valued higher than their peers. And we all know that Tesla has been a great investment for many people. Now let's look at this section real quick. This is the popularity section and it tells you exactly how popular this stock is among other investors. In this case, Tesla is the most popular of all stocks, since it ranks very high on Twitter, YouTube, and even has the highest volume trader among all stocks. What you want to watch here is a sudden change in the rankings, meaning if a company you're analyzing suddenly goes up in ranking, this might be followed by a rise or drop in price. Also, you can click on any of these links and you can check what other investors are saying about the stock. Now that we're done with the metrics section, I want to go over some important charts that you have to understand if you really want to make money in the stock market. First is the revenue chart. You want this to go up and to the right. Simple as that. Beware of companies with a revenue chart going down. That means the company is making less sales, and obviously that's gonna influence profits. You also want to see profits go up. And even if a company is not profitable, you want to see this improve over time. The profitability improvement metric from the previous section can help you with this, but you can also see it visually. Also, it's good to have a business that has a positive cash flow. You might get companies with good profit growth and negative cash flow, which means that money is leaving the bank. This is a red flag, and you will need to find out why this is before investing in that company. Netflix was like that for some time, and because of it, their stock got cut in half. You don't want to be in that situation. Now, shares outstanding, you want this to be stable or decreasing. If this goes up, it means the company is diluting shareholders. I mean, this is not the end of the world, but it's not ideal either. Now, let's look at cash and debt. We want cash to be increasing and debt to be decreasing. Anything other than that is not ideal. Now, these are operating expenses. We want the chart to be as stable as possible or increasing very slowly. If operating expenses are increasing faster than sales, that's a massive red flag because it means that the cost of operating the business are increasing faster than the company's increasing sales. That's a no-no in every single scenario. Now, in the bottom of the dashboard, you'll find some basic info about the company in question. The most important part is the ownership breakdown. This will tell you what percentage of the company is owned by insiders, institutional investors, or retail investors. In this case, Tesla is really balanced, but most companies are not going to be like this. So if institutional investments is really low, like in the case of Palantir, for example, there might be an opportunity here. So that's the company dashboard. And the dashboard alone is more than enough of a tool to make a great investments very consistently. But if you want a bigger edge, we also offer an earnings calendar, track the earnings season, and a graph engine to make charts about absolutely everything. Now, the graph engine especially is a very advanced tool, so it really deserves its own video. But just remember that the basics can take you a long way in the stock market. But most people don't know the basics or are just too lazy to look at them before investing their family savings in a YOLO stock. Don't be like most people. Do your research, and in a long enough time frame, you'll make incredible returns. Now, I hope you found value in this video. If you have any questions, don't be hesitant to message us via email or just message me in Twitter. And until next time.